So that's Sunil. I'm going to invite next is Suresh. Suresh comes from Los Altos, California, all the way. Welcome from Saama Capital. Some of Suresh's investments have been also legendary. Snapdeal, Paytm, being some of them. Bluestone, Diwali is coming up. Those who ask the best questions are going to get 50% off on diamond jewelry today. Yeah? Bluestone? Okay. You've already given the money now. You can't give the coupons, right? So, Move in Sync and many others that he has invested in. A very successful investor, very insightful, and hopefully we'll get and extract some of that for all of you here today. Last but not the least, I'm going to invite up Sashi. Sashi is a seed stage investor, one that we actually need the most in this country right now, as we have early stage ideas and startups. Some of his we were actually chatting this about this in the speakers lounge, and Sashi gave out a few names which are obviously seed stage and they're not as popular as Paytm or Snapdeal or Oyo. And then we kind of made a joke that he's actually creating the future household names is where he invests in right now. Some of them being Hello Curry and others. But the fascinating thing about Sashi is whoever he writes the check, as an investor, as an entrepreneur, he wrote a check for $2.5 million to Yup TV, and that eventually got $50 million funding from KKR. So there's a magic signature, so you got to look out for this guy. Certainly, let's ask some hard questions as we go around. Yeah, so welcome all the three panelists. The topic that we were given today is investor tips for product companies. And so really we broke it down to three words, right? Investor, tips, and product. And we're going to try and stay focused on this as much as we can and then kind of open it up for questions. Although, feel free to ask questions as and when they come about. Just raise your hand. Do we have enough mics here in the system? Anybody from NASSCOM here? Or they've all left now for coffee? Small room. So just raise your hand so we can kind of do a little bit of traffic management so that there are not multiple questions at the same time. Although they are capable of multitasking, they might not be capable of answering multiple questions at the same time. So just raise your hand, we'll give you the chance, and then you kind of go. So I'm going to start this off and ask the first question, which is the kind of topic for today, is product. And a lot of people have different thoughts and different views and different definitions of what is a product. Is an app, is a widget, is a hardware device a product, is a food tech service, which I know Fresh Menu and others where it's delivery, is Thai noodle the product, or is the delivery on time for 30 minutes a product, right? So there's a services element along with the product. And so I'm going to first ask the question to Sunil. What is a product for you? When you look at investment opportunities, when entrepreneurs approach you, with product-related ventures, how do you define a product from your view?
Okay. Coming to Fresh Menu in particular, because that's the investment that we made, it's more like a service, but there's a huge amount of technology component, which is around 30 minutes before it's getting delivered. So that is the technology piece which you ought to call the product. But essentially, it's a services company, but huge amount of enablement happens with the use of technology. And that's the kind of a wave that we have been seeing, at least in India as of now. And it's just where the ecosystem is currently. And eventually, like any other mature ecosystem, we would like to see IP-led product companies coming out of from India. And services will be a very small component out of it. That's a different debate altogether, whether we as investors are ready for it, and whether the ecosystem, whether the founders are ready for coming out with a pure IP-led kind of a product at this point in time in the ecosystem.
So in your view, at the end of the day, it's product plus services, and as long as it makes business sense, you will invest. You're not necessarily looking for just pure product.
Definitely.
Okay. Suresh, any thoughts? I know you've invested obviously in Snapdeal and others, which you could also argue, is that a product or is that a service?
No, I think there are elements of both. I mean, the way I think about it, a little different, that, listen, within the Snapdeal is an e-commerce company, which encompasses many different things, technology, delivery, logistics, but in the end, they're using technology to sell goods in a different way. Is that a product from my sense? No, but it's an investable opportunity. So, to me, the distinction gets blurred. There's not a, yes, we will invest if it's product, no, we won't if it's not. We're looking for attractive opportunities that can deliver attractive returns for our investors. So, to me, the product, non-product, or product plus service distinction is less relevant.
Excellent. For those who are tweeting, here's the kind of silver nugget that I'm hearing, right? So it doesn't matter whether your product or a service, as long as it makes business sense, come pitch to us and we're ready as an investor, right? Okay. Now, Sashi, you are an early stage, investor. And so my question to you is, maybe if I can slightly change the question, is how much of a product is enough for you to say, I'm ready to write a check, right? What is that? A lot of people use MVP, sometimes abusingly, the word, everybody understands. Anybody not know MVP? Okay, everybody understands MVP, right? And so what is your version of the MVP? How much is enough for you to see before you say, I'm ready to invest?
Okay, so I'd say that how people go about building product companies has sort of evolved over the last few years. And earlier it used to be that, okay, you build the product, raise the money, build the product, go to market, and all the other stuff. I think right now what I'm seeing the most successful startups do is that they just build a very, very light MVP light in the sense of...
There's an MVP and there's an MVP light.
MVP light.
Okay, very good.
Smaller and smaller because you need to get out there like faster and faster. But the key thing here is to have real customers using the product. Even if it's just one feature thing, you need to sort of, in my view, start to get the customers engaged at that point. And at which point I would feel comfortable doing the seed check, at which point you can then expand it to a full-fledged MVP, and then you can go to the same customer. So that's how I'm looking at that.
So in the spirit of optimizing the time that we have and giving actionable insights to people here, I'm going to put a pointed question. So how many, you said you have to have customers and traction. In your view, how many is enough? Is it 5 customers?
Three,
is it
like I always say, 3 customers.
3 customers, okay.
Using that product.
Okay, very good.
In that form.
Very good.
That's enough for a seed
So
round.
if somebody needs to come to you and pitch to you, you need to have MVP light, and having 3 customers, hopefully that's not you, your wife, and your neighbor, right? Some other than those 3, using it, and then you are ready.
That's right.
Okay,
Yeah.
very good. I'm going to switch back to Sunil on a different question that we heard from the community when we were asking, hey, what kind of questions should we ask now that we have such an illustrious panel here? And the question came around deep tech, deep technology-driven products, and perhaps more business model-driven products, right? In fact, so much so that at NASSCOM we have a whole deep tech summit. It's kind of dedicated on technology. And so, from your perspective, obviously coming from Google, which is probably one of those deep tech companies, as an investor now at Lightspeed, how important is the entrepreneur's product or business pitch to you? How much of deep tech is something that you have to see, that you need to see, or that you advise them to put before they come to you?
It's not about we advising XYZ entrepreneur on how much amount of deep tech is needed. It's where, as I said, the ecosystem is currently as of now. At least at guys who get involved at the Series A and Series B stage, market creation is very, very difficult. We can't say, okay, fine, this is what we will go ahead and hunt for deep tech companies at this point in time. If we see there's a lot of interest and there are people who are committing for a 10 years kind of a journey, and if it is an IP-led kind of a product, and if you can see huge amount of prior expertise in building that kind of a product, and we see hundreds of entrepreneurs over there, then as a firm you build a thesis and say, okay, fine, now I can see there are a lot of people who are committed to that, and then you go ahead and invest. But that's completely different from what happens at people at a seed stage, where they are creating the market at some point in time. So there's a fundamental difference between at what time you get in from an investment cycle, whether you get in the seed or A or B, and it's a long haul. You can't get the returns in 8 to 10 years, so it's a very long play when you're talking about deep tech.
Good point.
And I do feel that for India, it's the time now. We have done a lot of models where we have excelled in some of the models, but now it's time to get deep tech. And once we see a lot of traction, I think investors will also get excited to be investing.
So you're hoping that we have more deep tech type of products coming out now than ever before, is what you're saying.
Yep.
But you're also saying that if you're the crazy, alone, first of its kind guy or gal with deep tech, which nobody else is offering, then as a Series A investor, please don't come to Sunil.
No, I'm not saying that. I'm not saying
What
that.
are you
We'll
saying?
keep it
That's
open.
right.
We will keep that option. hopefully we are able to look at that opportunity and say, hey, he's the right kind of guy.
Okay.
We see that kind of a
But
company.
realistically, you want to see some traction from
We
a
wanna see some-
market
Yeah.
perspective, right? So a completely blue ocean idea or completely one of a kind might not be as exciting, or might take longer, more meetings, I guess.
Exactly.
Yeah. Suresh, what's your thought?
Yeah, I think that's the betting on a market happening is tough. I mean, I've been doing this for my entire career, and one thing that I've learned is, no amount of our time or money will ever make a market happen. You really have to be at the right, catch it at the right time, and there's certainly some luck involved. So we are less likely to be, going after a market that isn't there. We'd rather see some proof point in terms of customers and a ready market that we can tap. That obviously will grow over time, but there's got to be something there already that we can dig our teeth into, and we see some validation. I mean, I think Sashi probably has a different perspective playing at the seed level, but the market bet's a hard one for us.
So you can't be alone. There has to be enough precedence or evidence, before it's kind of an important area for you to consider investing in it, is what you're saying.
Yeah, there has to be a little bit more.
Okay, good, fair point. So actually, everybody's been pointing to you as if you actually don't care.
As a crazy guy,
Right?
yeah, who's going to write checks
So
to.
we're all ears now on,
Yeah, so like the way that I see it is, for the last 2 years, I've done a lot of SaaS investments. I've done about like 15 enterprise SaaS plays and so on and so forth. And I know that there's a lot of interest even now of people starting up companies in the space, so I think that's all good. But for me personally, I think the global SaaS play is starting to get played out. I think all the key sectors, whether it's HR, marketing, sales, all of these sectors, I think there's a lot of startups that are each trying to attack that problem. So though for the last 2 years, I must have been one of the most active, enterprise SaaS seed investors, having done about 15. I'm now actually shifting away from it because I'm getting that is
Too many.
Too much going on there. And I would not do those SaaS plays for the domestic market. Maybe there's a big opportunity there. I see startups trying to do that, but it's not for me personally because I live in the US. I can add more value if they're trying to target the US market. So that brings me to the deep tech question. Now, I believe that there's a lot of exciting stuff happening in, ML, AI, all the other stuff, this thing. And I would love to see, is there enough deep tech, science and engineering happening here that could be the basis of a whole bunch of startups coming out. So that's what I would love to find out. But yes, I'm looking to actually invest at the seed stage in deep tech.
even though there is nobody else or very little evidence of others doing it.
Yes, I think as a seed stage investor, you sort of are in that boat, right, by definition. I mean, you really have to take those first few bets by the time they get to, well, Sunil and Suresh, they've been fully baked.
Got
hopefully.
it.
Yeah.
So you have to see farther ahead than perhaps a Series A, Series B, and what it could become is essentially what you're
Yeah,
saying.
that is a seed stage.
So on the record, what you're saying is that you are able to see farther ahead than Sunil and Suresh here. Right?
That's right.
So for those who are tweeting away, please make sure that you are
You,
taking
you
pictures.
said that in many ways even before.
That's right, that's right. As a moderator,
Listen, he will not only see far ahead, but he'll put his money where his mouth is.
put his money where his mouth,
That's
absolutely.
a big difference.
And so, as a moderator, again, my job is to make sure that we keep this honest conversation, and as opposed to some general gyan, which I think you have enough of already, and you'll probably get some more. So in that spirit, any questions? The rule of questions here in a fireside chat is that it has to be less than 10 seconds, because beyond that, it's an observation. If it's 30 seconds, it's a thesis. Right? So ask your question as fast as you can in 10 seconds so that we can actually spend more time. Yeah.
So here's the question, right? Product. What about consumer products, right? We're obviously in a NASSCOM product conclave, but what about consumer products? I'd like everybody's take on what's happening there.
What about it?
The consumer product space is hotted up. There are also brands that are coming up. So e-commerce is now taking a back seat versus brands that are coming up. There's been a lot of talk around consumer brands, online consumer brands. I'd like everybody's take on what they think and why is that interesting or not interesting.
Are you an entrepreneur
Yes, I am.
in a consumer brand?
Yes.
So give us 10 seconds of what you are working on.
My name is Arpita. I run a company called Buttercups. I'm in
Okay.
the lingerie space. I run a lingerie brand called Buttercups.
Okay.
We have an online, offline sort of
So
model.
whoever wants to take it, would you be interested or investing in a Buttercup lingerie product that Arpita is building? Be more specific, right? Again, we've not heard her pitch, but, you know, the space.
I'll start off since
Yeah.
she and I have spoken. We as a firm, about half of our investments actually are in non-tech and more consumer-oriented. So our thesis has always been that there are opportunities to build brands in India. There is an aspiration element that will allow high-quality products, even at a bit of a premium price, get significant traction and be entry vehicles for foreign buyers. So, we strongly believe in that thesis, and we've done a number of investments in that area. Sula wines, raw pressery juices, Viva sauces. There's a number of companies that fall in that category for us. So, we're very comfortable with things like that.
Anybody else wants to comment? Sashi, since you write $2.5 million checks, any thoughts on consumer? Just giving a helping hand here.
Yeah. Actually, like, that's something that I've never done. I don't have any experience with the building of a consumer brand. Yeah.
There's always the first time, absolutely. Now, you mentioned something, Suresh, down there at the lounge when we were kind of discussing this and getting ready for all of you. And I thought it was a very prolific comment that you made, which is, if you can't make it work in the US, you can't do this here in India, right? Now, that's a very bold statement, and people can debate and agree, disagree. Tell us a little bit more about what's behind the thesis.
That comment was more based around food tech and
Okay.
why we didn't do food tech. We just, living in the Bay Area and seeing the number of companies that are there and the usage, and none of them have really made it work. And when we try and apply that same lens to companies here where people aren't paying for delivery, the average order size is very low, the time and the infrastructure challenges, it just was something that it didn't translate for us. As we applied really what are, US models here in India, just didn't see it working.
Got it. Now, obviously, Sunil, at Lightspeed, you have taken the opposite view, and even though food delivery has not worked out very well in the US or other parts of the world, fresh menu and your investments arguably are doing well here. Do you believe in the thesis, and more importantly for the rest of the audience here, is there a positive or a negative that if a business model or if an idea that does not work in the US, that you should not try to do it here? What's your advice?
I don't believe in that. I think India is pretty much unique, but you can always look at what's happening in US and China. Even if you don't want to, there's so much of information around that, and you can always benchmark. But you should be smart enough to understand that whether it's a good business model or not pretty much early on, and not burn out and then realize it at a later stage.
So you're saying it doesn't matter whether it worked in the US or outside or not,
Yeah.
it may work here.
Yep.
And so as long as the unit economics are good and...
Exactly.
Okay, very good. Any other questions? Yes.
Hi, I'm Sunil. I'm founder of medical equipment manufacturing company. We manufacture endoscopy equipments. So I have pitched to various investors, and I have faced a very fundamental problem, and here if you can clarify that. See, there are many industries in India which are still import oriented. Medical devices is one of them. Now what happens when we design product for India to fulfill that indigenous gap? So we put price point at American quality and price point at American standard or developed country standard, or we keep the price point at Chinese standard, whatever product cost is coming from China. Now what dilemma we face is that if we keep price point or we compete with at par China, then some investors have come and pointed out if you are not putting a margin of 300 and 400%, your business is not going to be successful in long run. But if we start benchmarking with a developed country product, the cost of product development becomes very, very high, prohibitive. We fail in the beginning itself sometimes. So what should be the way ahead? And whether investors will be interested in a product which in a long run can be successful story, but in short run it doesn't make 300 and 400% of margin.
Are you saying you're compromising on the quality? When you're saying you have to put in more effort for that? I think when you're, especially in the medical equipment kind of line, right, it has to be the world standard, and you can't see a Chinese benchmark and a US benchmark for that, right?
Yeah, that's true. Actually, in American system or in developed countries, there are a lot of quality standards built in, like FDA and all, which qualifies for a lot of investment. But still, China has good hold in the Indian market. So, as a like starting entrepreneurs, we should compete with China also, or we should focus only on the product which is coming from the other way, Western world. The qualities like Chinese products are selling in India, surgeons are buying it, hospitals, even big branded hospitals are purchasing it. So there is no policy guidelines as yet from the government of India, but both products are equally successful. So my fundamental question is, aim should be for 400 to 500% margin, risking the future or we can start with a low margin but can succeed in the long run.
So I think you're basically talking about a business call at the end of the day, right? Do you want to have low margin and look at volumes over a period of time, or have high margin and just cap it after a certain period of time? That's a call that you guys have to take based on the total addressable market. If you think that people are ready to pay for quality and there's a large enough market, then you should go for that too.
I think it's a good question for some consultants, not the investors. Investors are looking for some ready-to-go answers, right? Not questions. Okay, there was another question there. Yes.
So my name is Ashwin, and I am Director and CEO of AlgoVision, which works on video analytics. My question on the MLA space, where you say that there is a new trend that is coming up. In US, you see that there is a lot of investment that's going on, and it's more on IP-driven business. Okay, Nirvana was acquired by Intel even before they tape off their first chip for $380 million. Do you think that in India such an opportunity exists, where we create a key IPs which can be a world class and can be invested in it?
So I'll take that. So like the way that I see India is also, it could be Indians living in the Bay Area who have ties to India. Now that kind of segment is where I'm focused on, and I think absolutely yes. In fact, I've done like a couple of investments in that space, and actually I'm looking at doing two more. One is in a video search, some work that was done out of a Xerox Park that's being spun out. One like a chip company that has an architecture that's 100 times faster, like for doing like all the vision processing than anything else on the market. Like the closest would be something like Mobileye out of Israel. So I think there is stuff definitely out there. So the question becomes, what is a way to make sure that you're not betting on something that has already been superseded by some of the technologies in the US, right? So it's like really one of those games as to how close are you to what's happening there that you can make a valid call when you see something here. And it's especially important in this segment as opposed to say you're doing SaaS types of things, right? I mean, it could be that the other companies in the US, but it doesn't really matter because if you figure out how to sell it, you get your first few customers, you work on the business model, your pricing, your support, you can make it work. But when you're betting on core technology, IP, there's no such luxury. Either someone else has got a much superior thing, or what you have is really something that's going to work and pan out. So the outcome of making a wrong call here is actually quite bad.
Pretty high, yeah. And the delta has to be so high between you and the rest of the world for your IP-led, investments or acquisition, right? That's kind of the lesson learned. Okay, any other questions? Okay, only one. So we will wait till about high hands go up and then we'll ask, right? But I have a question. How many of you are working for yourself? Those who are not working anywhere are working for your spouse. So truly speaking, how many of you are working on your own startup as we speak, as we are here? Okay, so about a third of you, right? So the question that often gets asked, and I think 2/3 of you are not entrepreneurs by that virtue, which means you're probably working somewhere else, thinking about doing something in the entrepreneurial space, which is, I'm hoping, why you are here in this panel, and not just because something else was not exciting somewhere else and you're just kind of hanging out here, right? I hope that's not the case. But the question always comes as to what impresses the investor. What attributes of an entrepreneur, when they come to you, are striking out, are standing out, and hence what. So Sunil, what impresses Sunil as an investor when an entrepreneur approaches you? What are the attributes that you see, if you can openly share that with the rest of the community?
Um, I can probably give it a shot in terms of the experience of the kind of entrepreneurs that we have been meeting, and in terms of do's and don'ts. And I got a lot of don'ts, which are more like very obvious to us, but not at all obvious to the entrepreneurs. So let me just start with the don'ts. It might sound funny, but most of the time, the entrepreneurs who come and meet us, I've seen them opening the decks in front of us, and they got some other VC's name right out there in the very first line. And that's like, oh my God. So they've got their dates, they've got everything, so we know when they have met someone else. So there's homework is zero. That's one thing. The second thing is they won't have done any kind of a homework in terms of what the market size is, and they'll start with this. This is what has worked really well in US and China, right? So one advice would be, even though you would have copied that model, don't say that. Come out with a lot of primary data to say this is what work that you have done. Don't ever mention that is the work, that's why I'm doing it. Okay, so that's a piece of advice. And don't ever give an impression. There are a lot of there is an opportunity to get friendly with the VC, I know, and we'll try our best to make you feel product. Don't ever give it that impression that you're building to sell from day one, right? But what are the other things? Yeah, these are some of the few things which I really wanted to highlight. And it's all depends on what kind of conviction that you have when you're going and approaching, and the kind of homework that you have done, basically.
That seems to be
Yeah.
the key word, homework. So you
Yeah.
got to research,
Yeah.
prepare yourself, and then present is kind of
Yeah.
what you're saying.
Yeah.
Very good, very practical, very pointed and actionable advice. Thank you. Suresh, anything that strikes out to you as, what is more impressive? Now, you probably have met, how many entrepreneurs in your life? Too many to count.
It's a big number.
Too many to count.
Over 22 years, that number adds up. So,
Wow.
No, I think, the passion and I think a pattern of prior success, I think is something that, definitely catches my attention. Being able to show that how you deal with adversity, because in early stage companies, adversity is a watchword. That it happens to everyone, and how you handle it, and how you think through difficult circumstances, and being able to demonstrate that, which is not necessarily the easiest thing. Talking through situations and allowing yourself to be a little vulnerable and talking about things that didn't work out well and how you handle it. I think that's an important thing to try and get across. Because there are going to be bumps in the road, and how you handle it is going to be critical to whether you succeed or not.
I got one more thing to add, Pinkesh, if I may. So there's a hack for all the entrepreneurs in order to know, for example, if you're approaching Lightspeed, what's the best way to know if you're meeting XYZ partner over there? It's always good to get the right kind of introduction from one of the investee companies. For example, again, I'm just going into the details. Once you go to our website, which are the kind of companies that you are invested, right? Go and meet the founder, and he has gone through the entire rounds of discussions, and he has raised considerable amount of money from us. So know what are the kind of key metrics really matters to us, okay? And he'll give you all the insights on what really matters, and you like it or not, these are the kind of people who crack it and are much more successful than people who have done, they would have got all the metrics, but if you got to 30 minutes into a meeting and you're covering all the wrong metrics, and if there are only top 3 metrics that I'm looking at and you're covering all the wrong metrics, it doesn't make sense to me. And it's the introduction from an investee company, I think that works wonders for any of the VCs.
That's a very good point. So I think what Suresh is saying is tell the real story, don't just give us the rosy story. And the actionable insight from, again, from Sunil is, get an introduction, get a warm introduction, as opposed to just kind of flagging you down right now as soon as we finish here. Yeah? Sashi, you obviously see entrepreneurs in a much more earlier stage. I don't want to use the word raw, but probably less mature, less seasoned. And so perhaps your views may be different on what you're looking for, what impresses you.
Yeah, for me, if the guy shows up on time, I'm halfway to giving a check. So.
Oh my God! Big round of applause for that.
But I think like the course of the last few years that I've been starting to meet entrepreneurs making investments. See, there are like a couple of things I found that are the common myth, but it's not really true. So one of which is, I see like a lot of people saying that, well, I need to form like a full-fledged founding team because that's what every VC is asking for, like a full-fledged team. And actually, the data shows that like a solo founder, in fact, will be very successful on his own, and trying to like really force fit a bunch of founders just because they've been told that they should have a full team. I think it's like a wrong path, and I see a lot of that. So that's a little bit of like a tip out there for those just starting out. The other thing is that there's a lot of weight that was put in the last couple of years that if the team were like 4 guys from IIT Delhi, they should get the money kind of thing, And actually, I found from my own experience that the startups that I'm funding with non-IIT founders, I think I'm going to make way more money than the ones with the IIT founders. So.
Okay, there you go. How many of you are from IIT here? This is probably not a good time to raise your hand. It was just a trick question. But that's wonderful. That's wonderful insight. For those who walked in a little late, I have 2 pieces of advice. One is there's some empty chairs, so walk up here and grab them. Second is, I don't know if you heard Sashi, those who show up on time, 50% of the times you just get funded. So perhaps you lost the round this time, but next time be here on time for the session. Questions? Okay, now we see more few hands. Yes, we'll go with you.
My question is for any of the panelists.
Here.
Have you invested in any of the medical device companies and which are focusing on India? And if yes, what kind of attributes you look at those in those companies?
Has anybody invested in medical device company?
Actually, like I've not, but that's one of the areas that I'm most excited about. I'll tell you why. Because you can go to market in India without as much of the red tape as you would have to do in the US. So if you've got something that works, you can actually go to market here quickly, get the trials done, and if it really works, you're then got a really big head start if you want to take it outside India. So I like that space for that reason, actually.
So the other side of what he's saying is there's a lot of trial and error you can do here. You know what I mean? There was another medical device company at the back. You got the advice too, right? Okay, good. Yes.
Hi, this is Pandian. I run a startup called Quick Connect, which is a next generation college app linked for phone book college. I have a question separately for Sashi as well as this team. So what kind of a financial instrument that you recommend to protect the interest of investors as well as entrepreneur when you write a check? Maybe convertible debt or preferential shares when you write a check.
Well, there are about 8 buzzwords in there. Connect IQ, holiday, preferential shares,
No.
I lost track.
So-
But you got it.
Yeah, absolutely. Yeah, so I would say that, I think most of the people like me are at the same sort of stage, which is that just use like a standard set of documents off the internet. So one thing that I've used for, I think for the last, 7 or 8 investments has been something called, like seriesseed.org. Just go to seriesseed.org. They've got like a bunch of things. So that's been used by a whole bunch of VCs and startups. Very fair terms to the entrepreneur, no extra. So I would just work off something like that and not get into like a detailed discussion of rights. And I think if the VC that you're talking to requires a lot of controls and safeguards, then you might want to look at other folks to talk to, because you really want to have something which is
Okay? Yes?
Yeah. Yeah.
Sorry, whoever has the mic goes. So,
Okay.
yes.
That's me. Hi, I'm Dr. Vinod Singh. I am the founder consultant of Hospitech Healthcare Consulting Firm. We're into hospital projects from concept to commissioning all over India. My question is, are the investors happy in investing only in the companies which have started revenue generation? Or are you guys investing in the companies which are still at the concept stage?
Do you have 3 customers?
We have more than 20 customers.
Okay, good. Well, Sashi is ready.
But we have another company which is still a startup, so I just wanted to know whether you are happy in investing at the concept stage or something which has taken up the revenue generation also. Anybody can answer.
like the way that we're structured here is that I do seed stage, Series A, Series A plus B, So basically it depends on the stage of the fund.
Okay.
So like for someone like me, yes, I would invest without like any revenue as long as you've got like 3
Concept.
customers who are actually using it so it works.
Okay.
So that.
Concept stage, it would be an opportunistic deal. We'd like to see a little bit of revenue, a little bit of validation from customers.
Okay. Thank you very much.
Okay, there's one there, yep.
Hi, I'm Venkat Raju. I run a e-procurement company. We did $1 million last year and looks to be much prospective. So my question to all three of you is, we are being advised by good friends and people who just look at us say, hey, I think you should go for raising a good fund and grow fast. So I said, okay, I think I can do a $5 million in the next 2 years. So most of them say, hey, no, you should tell 20 million to the investor, only then they would be interested. So my question to all of you is it right for me to be focused on generating a $5 million, or should I be trying to do books of showing a $20 million?
The spreadsheet will tell you whatever you want it to tell you.
Yeah. It's easy to build a
Say
spreadsheet.
20, make it 50. People will see through it. You have to be able to soundly support your financial projections.
I think make it more clear here.
There's a follow-up question,
So,
okay.
yeah. So my confusion is here.
This is the post
When
5 million or post 50 million question?
Still at the 5 million.
Still in the 5
So
million.
I like to look at the next step, not the second step.
Fair enough.
So the confusion I have is, I know very clearly that I can do 5 million, pretty clear because of the 1 million or the happy customers and the kind of references we are getting from them. Since we had to now, people are advising you have to take a faster route, try to make bigger. I said, okay, I'll try to look at raising $1 million or $2 million. But my question is, when I try to prepare a $5 million presentation and say, hey, 2.5 years, I think I should do 5 million here. They say, no, why don't you think of doing 20 million in 3.5 years? I say, wait a minute, if I can do 5 million in 2.5, is it not good enough for the investors to look at us?
So
Because I think after that, we can always plan for a 20 million after that, right?
Wait, I'll just take it quickly and then I'll hand off to you, Suresh. See, my view is you feel the need to sort of say 5 or 20 because you're trying to impact what is the current valuation you're going to get.
Not valuation. What I know I can clearly do is 5 million. Because
Yeah, then
with
why
the
would you
customers
not
in
just say
hand.
5? You would say higher number because you want to get like a better valuation. right?
Without the money, you can do 5. His point is,
Okay.
with the money, what should you be able to do?
Oh, you can do 5 without the money. Yeah. Okay.
Without the money, I think it will take 3.5 to 4 years. With the money, it should take 2.5 years. My question is it good to be honest and say 5 million is what I want to do in the next 2.5 years?
Ah.
Or is it good to say
Thank
I
you
want to
for
do
the
10?
question now. Yes. There's a big thesis there, but thank you for the question. Yes.
Honesty is the best policy.
Thank you.
And by the way, when you do make that 50 million, we want to invite you up here so that you can start investing in the rest of the fellow community. Yes.
Yeah, hi.
How much time do we have? We don't have time. So last question then.
Thank
Yes.
you.
Yes.
I'm lucky.
Yes, you are lucky.
My name is Asma, and we are a learning solutions company. We have presence right now in the US, UK, and Middle East, and India. We are looking at going for funding, and when we are talking to folks, they advise us, and we are also looking at emerging markets like Australia and all, because our competitors are also there. And we've done a market study which shows that there is potential. But then when we talk to folks, they advise that keep focused, keep, only go for the current markets. Don't try to put your feet in every other market. So what do you suggest? Like, is it good to just focus in certain regions, or is it advisable if there is an opportunity to go in other markets?
It's going to be a very long answer. Yeah?
Okay. Did you mean new markets or emerging markets? Like
Emerging markets.
Australia as emerging market?
Yeah.
Okay.
For our solution, it is because we see our competitors doing well there, and what the market research trends show, there is an opportunity there.
Okay. Yeah, so for this, probably I think we need to get much more insights on what your company is doing. I don't think so you can just answer it out here. We can take it offline. I think that will be the best thing.
Thank you so much.
So the answer is it depends. Yeah? With that, I think we're just out of time, and I'm getting very angry looks from the NASSCOM team here as well. So without further ado, a big round of applause for Sashi, all the way from Philadelphia. Suresh, Saama Capital, all the way from Los Altos, California. And Sunil, all the way from Jayanagar and all the way from Google. Big round of applause, guys, for a wonderful panel.